All right, guys, it's time that we talk about PayPal stock and get to the bottom of if this stock is a buy or not. Wall Street may actually be coming around to the stock, but that doesn't necessarily make it a buy either. So let's see exactly what's being said about PayPal, kind of separate out the truth from the ridiculousness that is Wall Street, and I'll tell you if PayPal is a buy or not for me. And we'll even discuss the economy, what's going on, what's everybody seeing out there, and all that as well. So a lot to get into today, but make sure you hit that like button if you like getting the truth without the hype, guys. It's the best way to help out the channel. It's the best way to help out all the creators that you have and love out there. Just hit that like button for us all, and the earlier you do it, the better it is for the video. All right, so once again, Wall Street is all over the map with this stock. Let's dive into it here, separate the truth from the hype, and get down to the bottom of is PayPal still a buy or not at this particular price range?
So many sectors have had such strong gains since the August 5th lows. Healthcare, for example, is up 5%. Financials up 8.2. I'm dropping below tech, obviously, which is the leader at 18, but discretionary is up 11.3. And Josh, on this note about the financials, you have JP Morgan 10 days up, right? Into Monday. The last 10-day streak was in July of 23. And you have a new stock on your list, something that you just bought. It's from the financial space, not a bank, but it is PayPal. Interesting. Why?
Yeah, so I bought it in the pre-market on the news that Adyen is going to do a huge partnership with PayPal's Fastlane service. I like, as you know, when the fundamental news lines up with what we're seeing in the technicals. And PayPal hit our list at the end of last week of the best stocks in the market. Technically speaking, this stock is now above its prior 52-week high. And it's been a really long time since there's been anything positive to say about PayPal. And I have lost money in this name before. So
right off the bat there, this is kind of what I want you to understand from Wall Street and how Wall Street works. He just told you what he is worried about is the news, which he's calling that fundamentals, but basically the news being positive, the momentum going in the right direction, and then having that line up with the technicals for the stock. As a long-term buy and hold investor, none of that stuff matters. That's not why I'm buying. I'm buying based upon valuation. I'm buying based upon, what I believe the management team can do in regards to the turnaround to improve that EPS to further push that valuation up. He was looking for something completely opposite than I was. That's why he wasn't interested in buying it at $50 and instead waited until it's 70. So my takeaway from that is not necessarily that it's a buy because of all these things that he said. I could care less about any of that. As a matter of fact, that's completely irrelevant. What it does show me is he believes that the momentum of the trade itself, not necessarily a long-term buy and hold investor, but the trade is moving in the right direction, and he's willing to take a risk and buy and have that trade move in the right direction there. But that's something I see retail investors, us, the little guys, routinely care about things that don't matter as a long-term buy and hold investor. Now, if you're looking to trade this, totally different ball game there. I completely understand. And I know here on YouTube, it's difficult because a lot of folks convolute all the things all together all the time. They talk like hedge funds, talk about fundamentals, not in terms of, hey, what's EPS doing? What's the trend for EPS? They talk about fundamentals in regards to the news and the momentum and, hey, the different moving averages and all this other stuff like that. I don't have any issues with that, but understand those are trading tools, not long-term buy investor tools. So you've got to kind of understand the difference between that nuance there. And he started off right off the bat, just simply because it lines up with my belief in PayPal doesn't necessarily mean that I care or that it's another bullish point on my checklist per se. Still comes down to valuation and end in regards to is PayPal a buy or not. The rest of this sort of stuff is talking about something completely different that I'm not necessarily interested in.
think twice before you follow me into it. But they have a new CEO, and the new CEO is making incremental moves to improve the fundamentals. We've seen that the last couple of quarters. And now
that's much more important to me than anything else he said before. And a new CEO, he's been there for almost a year now. So definitely coming up on the feels new because they probably weren't paying any attention whenever he was named versus what they're doing right now in regards to PayPal.
To see big partnerships, and I think that's why the stock has been breaking out. The other thing to keep in mind is Apple. And Apple, by the way, is the bête noire of this story. Apple Pay has just absolutely trounced a lot of competitors on wallets and payments. Apple has just preemptively opened up its near-field communications or NFC system so that you can tap to pay, and this will include Venmo. So having Venmo as an option alongside Apple Pay when you push your phone up against a merchant screen is something new. The axe on this stock is Dan Dolev at Mizuho.
Yeah, definitely another positive news towards PayPal. Again, doesn't add, $500 million to the bottom line or anything else like that. No, but it definitely puts them in the forefront of people's minds as they're continually using their products. In regards to Apple Pay crushing everybody and all that sort of stuff, we've talked about it a million times here on this channel. They're taking from a TAM that's not fully expanded yet. This still is billions upon billions upon billions of dollars worth of TAM to take in regards to the payment space before they even have to compete against each other. And oh, by the way, they're also taking from legacy banks as well. So, and we talked about that many, many videos before where everybody's concerned. Oh my gosh, Apple Pay, $40 billion last quarter. Oh, that had to have crushed PayPal. No, PayPal actually grew their bottom line and their revenue continued to strive up despite the fact that Apple Pay had that huge deal. So instead of it denting, it was actually the same exact growth rate that PayPal had prior to that. So it clearly had no impact in regards to PayPal's business as they were moving, but that's not the story. That's not the narrative. And more importantly, that's the reason why the trade was not there for PayPal at the time.
He went positive on the stock after having been negative for a while. And the story here is now changing. PayPal is, I think PayPal has a very hot product in Fastlane. And if they can gain back some more ground on all these payment solutions, it really changes the fundamental outlook. So it's a technical breakout. I have a relatively tight stop. I don't trust this name, but I'm in it, and I love it when the fundamental story is improving as price action is confirming.
Kerry, this thing was in no man's land.
That's literally the exact opposite of what a long-term buy and hold investor has, where I want to see the actual fundamentals, not the fundamentals he's talking about, not the fundamental story, the actual fundamentals on earnings improving while the stock price is actually going down. That's exactly what I want because it means I'm getting shares on the cheap, and that gap in between it is the money I'm going to make. And as that gap gets larger, the more money I'm going to make on the back end because stocks always return to fair value. It has never not once happened in the history of the stock market where that did not happen, where that was not the case, both the up and down. When you get way overvalued and you way outrun your actual fundamentals in regards to earnings, you're going to come back down. It is the reality of the stock market. It has happened every single time. Matter of fact, it's probably the only thing in the stock market that's 100% true 100% of the time. Everything else is just noise and pretty charts and graphs and all the other crap like that we talk about.
For a long time. You used to own it, didn't you?
As a matter of fact, I remember the last time that Josh bought it because we had sold it.
Yeah.
And I wish Josh luck. I mean, there's a lot that
Carrie.
right, but yeah, I do. I remember. I think if the market holds up, if retail holds up, it's good for PayPal. That's what it needs. It needs not just partnerships. It needs people to keep spending on their platform.
Yeah. So, Steph, all this news about Buffett selling Bank of America, selling the stake down. You've been a buyer and you're a believer in financials. Do you think there's momentum in that sector moving forward here with all that lies ahead?
First and foremost, Buffett is still a 12% owner of Bank of America, right? That's number one. Number two, earnings. To the point of view, you guys were talking about broadening out in the market.
That's an excellent point right there that she's making is everybody seems to freak out whenever Buffett does anything. And you've got to look at it contextually. Buffett can sell billions of dollars worth of stock. And for him, it's a 1% move. 2% move, a 0.5% move in some cases. I've seen that before. People freaking out, oh my gosh, Buffett said this. And it's like he sold 0.5% of his position. And oh, by the way, you find out later on, it was just simply to pay the tax bill. And that was just a stock they chose to sell to pay the tax bill. That was due at the end of the year there. So silliness like that all the sort of time. You got to take that sort of stuff contextually. Just simply because Buffett's buying or Buffett's selling, Buffett's playing a different game than 99.99% of the investors. And that includes you and I. So, getting too excited or too up or too down on any of these sort of moves is just not really a prudent strategy at that stage. So I'm glad she pointed that out right up front to kind of kill the whole narrative that, oh my gosh, you should be worried about financials because Buffett sold out of a certain amount of his Bank of America stock.
Financials grew earnings 17%. And by the way, discretionary, 31%. Healthcare, 17%. So there's no wonder why we are seeing this broadening out, right? I mean, that's the whole point, is that earnings are doing better than expected. I don't care, you talked about 5% revenue growth for the overall S&P, and that wasn't great, but I'll take 5%. That's about a 2.5% GDP world translation, and you're seeing margin expansion, which is why you got 10% earnings growth. So to me, that's the exciting part. That's why we're seeing the broadening out. Back to B of A, it's
I don't know who this lady is, but I really like her. She's absolutely correct. Matter of fact, you get 2.5% GDP growth. That's the perfect amount of GDP growth that you want year in and year out. It's exactly where the Fed wants it to be. That's exactly where a healthy economy is at that stage. Too much, that's how you get nice inflation like we got. Ridiculous inflation. Obviously, you start getting down below that, it starts to become worry of a recession there. So being in that 2.5% range, and the twos essentially is the optimal point to be in. So another great point that she made there.
1.5 times tangible book. I think it can get to 1.9 times because net interest income is 50% of their revenues. And with interest rates coming down and them repricing their bond book, I think you're going to see something like $63 billion in net interest income by 2026, net interest margin expansion as well, fees coming back because the last decade they got hurt because they reduced their mortgage book. So that goes away. And they're seeing investment banking fees at the same time. Expenses are growing GDP kind of plus or minus 1%. I think you add it all up, it's a very cheap stock. So I like it. I'm overweight financials, and I've been very pleased with the rally in the sector.
So you've been pretty opportunistic. When 2 weeks ago Monday, when crowds were running for the hills with this panic attack over the economy and the unwind of the carry trade, you were a buyer. So now that we've had a huge snapback, how does that influence your decision making now?
Well, think about that. Yeah, a lot of you guys were buyers. I was buyers. I mean, shoot, you were getting, Palantir at 20. Oh, that's turned out really well for you in a very short period of time. Obviously, SoFi in the fives, all kinds of crazy stocks. Just a freak out moment. Those that were prepared got to take advantage and made a lot of money on it. That's what preparation does for you in regards to stocks. You're prepared, you can take advantage of it. You go listen to this noise, and whatever this exact channel, I can guarantee you, was telling you, oh my gosh, this is terrible. This could unwind the whole economy and the whole, just doom and gloom all the way around. And those that were prepared and didn't listen to that stuff made a lot of money in the short term there in regards to that, even though we're not traders. Made a lot of money on those particular buys that day. So that's just another point in our favor in regards to being long-term prepared, long-term buy and hold investors.
Less buying, we've had a heck of a run back, right? But I'm still a believer. So maybe September is volatile because it historically is. And if it is, I will be back buying because I had stocks like Eaton and Lam Research, Bank of America, Truist, CrowdStrike, so many names came off double digits. I mean, Lam Research was down 50, because you own it, down 15% in 2 days on no news after they beat and raised. So I was opportunistic because I didn't think it was a credit problem. Obviously, carry unwind, the yen carry unwind was a big deal, and it was surprising, the moves, but I think that gave you the opportunity because I go back to the economy, and the data has been pretty good. ISM services were better than expected, new orders, employment, initial claims, retail sales. I mean, we're not falling apart. And so I go back to your comments about your clients being worried. I think they're worried because interest rates are still so high, and that does it last? Is it going to be a soft landing? For now, it is a soft landing supported by earnings.
All right. So basically on her last point there, that's what everything is pointed to this entire time. I know there's a lot of, especially if you watch, I don't do politics on this channel, don't care at all. If you watch one particular news station, another particular news station, everything's doom and gloom all the time, all that sort of stuff, but it's not supported by the data itself. I would also agree that it's not the best economy ever either. We're just kind of in that normal kind of mid-range coming out of the high inflationary environment. And so far, every single major bank and the data has supported a soft landing being able to take place and still being the most likely scenario out of the group. And it's been that way here for some time. So far, so good. Now, not all the way there yet. Understand that completely. So you got to be cautious with that. But to immediately, if we're looking at an 80% chance of a soft landing and a 20% chance of something else happening, to focus on that 20%, you're betting against yourself at that stage. You're betting against the odds here. And until we see something tangible in earnings or in the Fed data, which I know the Fed data lags, which is why I actually enjoy earnings better than that. That's what the big banks are showing. That's what other indicators are showing. Now, not everybody's doing great. Yes, you're seeing some Some companies do great, other companies do bad. Well, I would say to that, welcome to the stock market. Even during the most booming of boom economies, it's not like that narrative doesn't exist during those times. It absolutely does. Every single year, there are stocks that are big winners and big losers, and it constantly tends to be different stocks at different times. It's just kind of the way that the stock market works. So it's definitely not something I'm worried about in regards to that. Now, moving on to PayPal, and do I think PayPal is still a buy? I still have it as a buy. I like the fundamentals in earnings improving. So far, Alex Chris has absolutely delivered on what he has promised on time so far. Now, there's still a lot more to go. We're like 20, 30% in this journey here. Still got a long way to go on that other end there, but things are falling in place and they're making the right moves overall. More importantly, I'm seeing it in the fundamentals. And finally, as you see, Wall Street is starting to wake up to it. Now, they're waking up to it because they want to trade it, but I don't care at that stage. I just know for me, the fundamentals are improving. The valuation is still really cheap. And so therefore, although I own more PayPal than I want, we call it PayPal there in the group, it doesn't make it not a buy either. It's definitely a stock I'm looking to add more shares on any sort of weakness, on any sort of ridiculous stuff. Like, I don't know, a yen carry trade is somehow going to tank the entire world economy. And oops, yeah, sorry, fake out. That lasted half a day. Silliness at the stage, typical Wall Street. And that's why I ignore a lot of this sort of stuff. And if you want to see my exact price target for PayPal and SoFi, Tesla, and a whole lot of other stocks, you want to take 5 courses for free, be a part of the best 6, 7, and 8-figure Discord out there, get your free coaching, jump on our live Q&As. Guys, there's so much involved in the group. Make sure you check out the pinned comment. I may have left something special for some of you guys that have hung around in the video this long. Might get something special down there, so make sure you check out the pinned comment. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.